Yeah, go for it. Been a while since we spoke, hasn't it?
Yeah, it's been a few years. I guess for me personally, a lot of things have happened since COVID.
Yeah.
We ended up moving down to Texas and buying a house here. So that
But
took
where's here? Sorry.
from New York to Texas.
You sold in Texas and bought in New York?
Other way around. So I
Oh,
was
okay.
renting
Sorry.
in New York. I was renting in New York, and then we moved to Texas for the space. No taxes, state taxes, so it kind of makes it a little bit easier on the budget
So
and
I
gives us
hear.
the wide open space to kind of run around.
And the food's a bit different too, isn't it?
It's actually interesting. Where we moved, we're near Houston, and it actually has a lot of the same things as New York City. So, we have our halal guys, which is the straight from the street corner. They have little restaurants out there, and then we have our ramen shops, and everything that we kind of like is down here as well. So it wasn't too big of a, other than driving, it wasn't too big of a change.
That's awesome.
Yeah. So I know a lot's changing with you as well. I've been following along kind of over the years everything you've been doing, and I really appreciate you, taking the time to actually put forth the information that you're doing. I know it's not easy, and it's starting a new business, right? And trying to increase exposure to things in Japan that more or less have been locked to strictly native speakers and native locals, right? So
Residents, yeah, that's
um,
always been the case. Yeah.
exactly. So I'd love to hear a little bit more about Nippon Bridge, kind of where I'm coming from as a background. I've been networking a lot, since the last time we've spoken, and found a few people who are very interested in uh, connecting their interests in Japan in a way that creates profit, right? So everything that I'm going to be learning from you today will be kind of going back to them, and we'll probably have more conversations over the course of the rest of the year, and then hopefully be able to solidify something within 2023 and kind of go forward.
Yep. Excellent. So, I mean, Nippon Bridge, I mean, things have changed, but haven't changed kind of thing. So NTI is still going strong, actually stronger than ever. I think the pandemic, for some reason, I heard on the BBC that it's Japan's the country that people are most waiting to get back into once the borders open. And I think that's been reflected in people purchasing here as well. So for the first year and a half of the pandemic, prices were a bit softer here. So investors were having a field day. And then prices recovered, but people were really, I guess, psychologically, not that I'm a big expert, but I think people were missing the country more because they couldn't get in. So we've received a deluge of holiday home shoppers that are just, just stuff it. I'll buy it remotely. I just want to have it here when the borders open.
Sure.
So for NTI, it's been the first 2020, then 21, and now it's shaping to be that 22 is going to be, even better. So it's been the best years for us. So on that front, things haven't changed at all. We're still doing what we were doing for the past decade or so. But along the way, as we constantly receive inquiries from either existing customers or potential customers, one of the questions that constantly comes up, probably second place after can I get a loan? The second question that constantly comes up is, can I get a visa if I invest in Japan? And with real estate, it's not directly possible. I mean, it's possible if you set up a company that deals in real estate, but most
Right.
people, for the amount of money that they're investing here, or at least our customers, which are not, because they can't get a loan, they're usually at most up to $1 million per asset or so, not beyond that. Nobody wants to put down more than that in cash.
Sure.
So for them, it doesn't really make huge financial sense to set up a company and hire staff and go through all of that overhead for investing in property, because the property investment doesn't actually require that, right?
Right. Exactly.
And also with property investment, you want to claim as much as you can in deductions and depreciation and reduce your taxable income as much as possible from a tax perspective. But then for a visa, you actually need to have higher taxable income. Otherwise, you can't constantly renew the business visa. So all of that dynamic throughout the years has sort of seeded the idea in my head that there should be other profitable but relatively risk-low ways for people to be able to invest here, and also utilize that investment to get a business management visa. So the option to set up your own shop from scratch here has always been available. People come here and they set up, I mean, the minimum investment capital required to first apply for the visa is just about 5 million yen. So people can potentially invest $50,000 or so, set up a business in Japan, come here and run it, as long as they're generating enough income to renew the visa and hiring local staff. But again, Japan being Japan, and most of them not necessarily knowing how things work here, or not even necessarily having had the business experience running a business elsewhere, the risk factor is quite high.
Sure.
So when we first were, when Japan franchises were first brought to our awareness, and we recognized that they're always looking for franchisees, and they have, or at least the better ones among them that have been experiencing good growth, they have a very, I mean, it's a business, it's not risk-free like a passive property investment, it's a slightly higher risk factor, but they do have the blueprint in place, and they do hold your hand throughout the setup, and then throughout hiring and training your staff, as well as through operations with national advertising, which they take on, and with helping you as soon as a staff member leaves or is fired for any reason, you hire a new one, then you can go with them through the training again. So they do vastly reduce the risk factor involved in setting up a business. And also your success is their success, because they keep collecting royalties, and it's their brand image that gets tarnished if something happens to the franchisee. So it's not, again, it is a business, it's a higher risk factor than a property investment, but it is a much lower risk factor than starting up a business from scratch in an unknown country kind of thing.
Yeah, absolutely. And I guess, Nippon Bridge, where does that kind of come into play in between these kind of, it seems it's like the same thing you're doing with NTI in terms of a buyer's agent. Now you're acting as the agent to the franchisee, kind of in that sense of this almost like a management company style for people who want to get involved in this business.
Exactly. So we've been a property portfolio manager for our real estate people, and now we're a business portfolio manager for the Nippon Bridge people. Exactly the same sort of setup, and same as we do with NTI. We don't claim or want to be involved in every aspect of the business operations. What we do is manage the project or manage the managers. So we work with the third parties who are on the ground in whichever city we're operating in. If it's close to where we are, we might be running the operation itself, but again, from an upper level sort of perspective. So we're an added layer that gives the investor a single point of contact. We take care of your bookkeeping, and we manage the operators who are then running the business directly.
So how does that kind of fit into your typical price point, right? Because I'm looking at, so what I've done on my end is just taken, all of the different franchise businesses that you've put on your website and kind of just run through what their IRR could potentially be. And I'm always looking for what's missing, right? So what are the costs that are missing upfront from what you're showing on your website, in terms of what does it cost for you guys to manage this portfolio? And then what are things that are not included in like the expenses that you've listed out on there? And kind of, my guess is you're taking averages coming from the companies that you've talked to, and then kind of, across various locations, kind of averaging it out versus like, okay, Tokyo is very, very expensive. Fukuoka is not as expensive. Kyoto might be, it's getting there. Kyoto might be a little less expensive, but then as you're moving to like where some of these chains are and kind of I call them the outer boroughs of major cities, costs usually decrease, but then, traffic, foot traffic and kind of all of that stuff also kind of decreases with it. So if you could kind of walk me through that, that'd be great.
Yeah, so that's essentially correct. What we do is in the initial stages, we get case studies from the franchisors, and they give us a few case studies of different size operations, different locations, and then we try to average things out. the bottom lines that you see, so on the website, similar to the property website, on the website, what you get are just bottom lines. So the total amount of capital that was invested and the amount of ROI based on the case studies, but that's already including our fee and the operator's fee and everything that's involved in it. But those are, again, those are case study numbers provided by the franchisor. So once we're engaged by a client who's interested in pulling the trigger, once they get all the due diligence sorted out, then we enter into an NDA agreement with the franchisor. And then we get a copy of their contract, we get more detailed case studies, and we start toing and froing with Q&A, what's involved in this, what's involved in that. And because it's a business, again, it's a business setup sort of scenario, the numbers are never going to be 100% correct in these assumptions that we're making beforehand. So I can give you an example of a customer that's recently started out in Tokyo. Give me a split second. That's that financial. Okay, so let me open two screens for you. One of them is the initial case study we got from the franchisor, and one is the actual costs to date. There's still a few costs that are going to be coming along the way, but let me share that with you. This and this. Actually, let me just share the whole screen. That'll be easier. Okay, so you're seeing two Excel sheets there, left and right?
Yes.
Yeah, so let me maximize the one on the left first. So this is what we initially got. This customer is just about to open a secondhand goods purchase or buyback store. And the way that works is people walk into the store selling their secondhand goods. It could be jewelry, Louis Vuittons, high-end electronics, whatever it is that they need money to either upgrade or they need money because they just need the money. They come in there, they sit down for a consultation. Based on the training received from the franchisor, the franchisee or the franchisee store manager then evaluates the goods that they want to sell. They tell them if they can accept them. They tell them how much they're going to be able to buy that from them. And then headquarters at the end of the month buys everything from the franchisee as long as the manager indeed was following the proper evaluation process. So as part of the training, they'll let them know what sort of goods they will be able to buy back from them and what they won't be able to buy back from them. So it's not a guarantee in the sense that they're writing down in the contract, we're going to buy everything that you've got in the store at the end of the month, but it is very much a promise that if you follow our training and if you follow the correct evaluation procedure, then we will buy these things from you at a profit. And this is how the franchisee makes their money. And then the franchise headquarters then go on and sell the stuff that they bought back online via Yahoo auctions or eBay or whatever they've got. I suppose they've got supply chains in other Asian countries and so forth. And then they make an extra profit, but that's out of our sphere of jurisdiction. We don't really care about that. So
the Daikichi store is where the customer comes in to sell their goods, or
correct.
Not necessarily the customer, but the person who's looking to sell their goods comes into the local store, sells it to the local store based off of the valuation policy that the headquarters has, and then they in turn, if they, like you said, if they followed all of those policies, then the headquarters will buy it from the franchisee.
Correct.
Got it.
So again, this is the case study. This is what we've received from them initially, and the joining fee, equipment purchase, installation, store fitting, blah blah blah. Just put all of that aside for a moment, and then we've got the operator's startup facilitation. So the person was actually on the ground in Tokyo, setting up the store and conducting interviews to hire staff. And then our investment or portfolio management, right? So they charge their 10%, we charge our 4%. right? And then the total based on all of the above was supposed to be about 12 million yen. Now, when we actually signed up with the franchisor and we received the list of potential locations where they believe that the next shop should be set up successfully, the one that they recommended the most, and they were very certain about it. They actually just gave us a single property and they said, go open the store over there. We being, Gaikokujin tire kickers, we ended up asking for, could you give us 2 or 3 options because we want to and ah about it. And they said, sure. They gave us a few other options. Ended up that they were correct. So the location that they recommended was indeed the best location to move forward on. And we ended up doing that. But that location was a bit pricier than the original estimates. So the rental acquisition went up. Where was that? Rental acquisition went up because the store was bigger and in a better location. Renovation costs went up because it was a bigger space that needed a bit more renovation. And also they forgot to include the security cameras, which are an essential part of that. Not a huge expense, but another $2,000-3,000 there. So what we ended up with was actually, as opposed to the 12 million discussed, we ended up with a total expense of about 15.5 million, right? All of that has been paid to date. I think this was already a week or so ago. So I think this part has already been paid as well. And the recruitment ad has been paid as well. So we're now getting closer to this, which is probably going to be the final setup cost. So we would assume in all cases, because it's a dynamic sort of estimate that depends on where exactly the shop is going to be set up, and also on how available local staff are. If it seems like it's a bit more difficult to hire, we might need to raise the salaries a bit. So I would probably, to be on the safe side, estimate something like 25 to 30% beyond the initial case study. And hopefully, because the store is better located and bigger and draws more attention on the street, hopefully the ROI and the net profit will go up as well, but we don't know that yet. We're just getting started. The advantage of this business, if you compare this business, for example, to, let's say, a fast food joint or a takeout lunch kind of store, is that the majority of the monthly expenses that you have here are actually purchases from customers. So in this particular case, there's no perishables, there's no ingredients that you want to buy and hold on to and hope that they don't spoil because you haven't sold enough. If people don't walk into the store, you don't buy from them, right? So that part of the expense at least will become, the lion's share of the monthly expenses will be a lot lower if you're actually not doing good business, which could be just a case of business not being as successful as franchise HQ supposed, or it could be a case of just the first few months starting up. Takes time until people get to know the place, until your local advertising reaches all of the people in the area. We would normally recommend to allow a runway of about 6 to 12 months until the business covers its own expenses. Franchise headquarters estimate 3 to 4 months. In all cases, we're a bit more conservative. So we're hoping for 6 to 8, but recommending 6 to 12.
Got it.
So in this case, even if we don't purchase anything from customers, we still have, and the operator and us also make our money based on actual income, actual profits. So we don't charge if the store is not buying anything from customers, but you would still have, what does that come up to? Let me look down here. So you'd still have about down here 1.6 million in expenses, even if a single customer hasn't walked in the store, right? So we would, in this case, recommend 1.6 million times 12 as a worst case scenario. Aside from the 12 or 15 million, we would probably advise to have, worst case scenario, about 20 million on hand. In all likelihood, you're probably only going to need, worst case, about half of that. But we would still advise not to be strung on capital halfway through the opening, right? You want to make sure that you've got enough runway space to maintain the store for at least 3 to 4 months before it starts getting at least some of that money back.
Yeah, no, that makes sense. I guess kind of comparing it to how franchises work in America, you know, typically most franchises are, you know, 250 grand US all the way upwards of, you know, a couple $1 million. Um, how is it that the Japanese, I guess comparatively, maybe if I'm thinking about it in that sense, coming from a local perspective, that's kind of comparable to what we would see in the US, when, you know, translating it from US dollars into yen. Uh, we're looking at what did we say this one was? Franchise joining fee is 2.2 million yen. So comparatively, you know, coming from the US, that's significantly less than a joining cost in a US franchise. Um, are you seeing people, kind of customers? Well, I guess this is new, but I guess the if you had a thought process of, you know, looking ahead into the future, do you see the U.S. customer base that, or just the non the non local Japanese customer base, looking to run multiple franchisees of the same or different franchises, as you kind of go through these case studies and connect with people who are actually launching them? Like, are they expressing their intent to open up multiple chains?
So all of them are definitely expressing the intent to have more than one single location or store. Whether it's going to be with the same franchise or another franchise depends on the investor's diversity and risk appetite, and also depends on performance. So I won't be able to tell you if they'll want to go for another store of the same chain, or they want to try, getting the feet wet with a different type. That's very personal and also very much based on what they'll actually be making. So I can definitely testify to the fact that they all want to open multiple franchisees, multiple locations. Whether it's going to be with the same one or not, I don't have any idea yet.
Understood. Kind of in thinking through that a little bit more, if a location does not do well, and they decide it needs to shut down, what is kind of how much is actually the headquarters instrumental in helping that situation?
Well, depending on the contract, so each of them have a slightly different contact, and each of them have a slightly different renewal period, and you always have to pay a penalty if you close mid contract. The penalties vary, and sometimes they don't really insist on them. I mean, if it's clear that it's not the franchisee's fault and the business has been running profitably and they just estimated incorrectly as to the location, they might not charge you anything. But at worst case, we've seen up to 6 months of royalties that would still be owing. So if it's a fixed royalty situation like this one, for example, that'd be 6 times 220,000 yen. If it's based on sales, it'll be based on the last few months of sales, in which case it might not be much if the franchise is not operating profitably, or it might be a fixed cancellation amount. So it's case by case depending on the franchise HQ.
Got it.
They don't help you in the sense of they're not going to pay your costs to restore this to pre-rentable condition or anything of that sort.
Right, exactly. I mean, it's still business when it comes in the end. You're still the one in charge of that business, and kind of the contract for rental location, the franchise contract, and kind of anything else that you get involved with. Understood.
Yeah.
How many people do you see looking to go to major cities? I mean, Tokyo is obviously one area that has prime real estate, but at the same time, it comes with a significantly larger cost. Do you see people looking more at the, I guess this would be more related to the food sector, but do you see people looking more for that mobile vehicle to decrease their costs, where they can permit that and I guess have a specific area that they can travel around, or do you see people going more for the physical location, right? Because in New York City, there's a significant number of food carts, right? But then there's also a lot of food trucks, and a lot of businesses are actually going to almost like they call them ghost kitchens here in the U.S., where you just have a rental kitchen and then you distribute it out either to a food truck or a food cart.
Or office deliveries and stuff like that.
Or exactly, or office deliveries, like Uber.
We've got them here too. We see investors coming in with their own ideas of where they would like to set up shop ideally, and usually those are going to be the people who are also interested in relocating, so they want to be close to where the business might be operating. But we really advise to follow the franchise's directions in that if you can afford to. So if they're recommending a super central Tokyo location that is just not going to be within your budget, then we say, no, we can't afford that much. But generally speaking, they've been monitoring their growth and they've been monitoring the competition. So we've recently had a few people, for example, inquire about a particular franchise. I think it was a food franchise, and they wanted to set up shop in Osaka, and Franchise HQ said, well, you're welcome to if you want, and we'll tell you, we'll pinpoint particular properties that are available for rental that might be suitable. But honestly, we have very strong competition in Osaka from this and that company. This would not be our chosen channel of expansion at the moment. We're feeling that the market's oversaturated in those neighborhoods. There's not any attractive other neighborhoods that we think would be really profitable. We'd recommend Ibaraki, so any North Kanto region, for example. So not necessarily in Tokyo. They would definitely not always point out Tokyo, Osaka, Fukuoka. They sometimes look at smaller prefectural capitals that they just haven't been operating in at all, or there's no strong competition there. So again, if you can afford to, it's best to follow the directions. Again, they have an interest in you succeeding as much as you do.
Sure. No, that makes sense. I would say I actually have to run very, very soon. So
yeah,
I'd love to keep this conversation going in a second call. I think most of the stuff you've answered, I think there's a good amount for me to take back and kind of think through some additional questions, maybe a little bit more targeted questions. But no, I appreciate you taking the time and being able to, talk through this and that you're actually, going through and opening this up. It's definitely a very good and scalable, almost turnkey style investment where, you being the center of that in Japan makes perfect sense. So I appreciate you, taking the time and the thought and actually going through this and making it happen.
Pleasure. That's been our MO for the past decade. We hope to keep it that way.
Yeah, absolutely. I guess my biggest question for you is, what is your key man risk? Just in general with NTI, Nippon Bridge, what happens if you go away? Who picks up the mantle?
Same story as NTI. So same as each property has its own property manager, and Japan being a legal recourse country, it's very easy for anyone to prove that they're the owner of the property. So same goes with the business. Each business would have its own business operator in place. We're just utilizing third parties as we do with property. So it's not going to be as easy or as smooth to pick up the mantle, but you should be able to communicate directly. Perhaps you might need to hire an interpreter to actually work with the operators or work with the staff in the stores. But I mean, it's always possible for you. I mean, you're the sole owner of the business. You or the group or whoever it is the sole owner of the business, and there are plenty of English-speaking legal practitioners in Japan. They're not cheap, but it's always easy for you to take ownership, and then it'll be a matter of just communicating with the people who are already running the business. So it's never going to be us directly that are running the business. So if we disappear, and you'll need to insert yourself plus some maybe Japanese-speaking staff in the middle there, but the option is always there.
Got it. Awesome.
All right.
I mean, it's the last thing I would want to happen, but always have to
No,
ask.
hey, people dying, plane crashes all the time. But I guess
Absolutely.
the main thing is, I mean, we get hired to smoothen things, right? So we get hired to make things simple and give people a single point of contact, and for the investors' peace of mind to know that they're generally going to be hands off. I mean, there are bottom line decisions to be made at any point along the way, but they're bottom line decisions. They don't need to be involved in the day-to-day operations or month-to-month operations of the business or the property management. If we suddenly disappear, you would need to be more hands-on. It's not going to be as smooth. That's the main point. But there'll be an added layer of payment removed at least. So
One last quick question that came to my mind is, Japan is mostly cash transactions. So how are being an accountant myself, how are the physical cash accounting being reconciled and then kind of up the chain, right?
yeah,
Making
so
sure
you're
that
going to
cash is
be
accounted for correctly.
you're going to be setting up a company, and that's a cost that's not included in all of these case studies, because the same company structure that you're going to be set up will potentially, and again, all of our customers to date have been looking at that, will the same company structure will be handling all of the franchise operations you might have in the country. So once you set up the company, which is about 150,000 yen for setup, and then at a minimum, even if you haven't made any money, it's probably going to be about 200,000 to 300,000 yen a year in annual upkeep. That structure will then receive all of so we at NTI will handle the bookkeeping, an accountant will handle the end of year accounting and the salaries and everything that comes with that. But all of the cash collected from the franchise during the month will be deposited, depending on the franchise and how they operate, but either once a week or once every fortnight or once a month will be deposited into the company account, which is going to be under your name. So that, again, that becomes a lot easier when you own a business as opposed to owning a property. You can actually set up a company and open a company bank account in Japan. So there's no need for us to be managing your funds aside from bookkeeping.
Got it. Okay, cool.
Yep.
Awesome. Well, appreciate your time. Got to run, but always a pleasure speaking with you, and look forward to having another conversation soon.
Same here. Speak soon.
All right, take care.
Bye.